Once it got through 2015, though, any pullback you would have to believe was going to be bulled. What does it do now? The problem is non-farm payrolls. I know it's a very big event for the currencies out there. This is the big currency event, jobs numbers, that tends to lead into a massive dollar move, which can push gold around a lot. There's also a lot of illiquidity kind of moves going on. You can see here that it gapped up. For anyone that shorted that, congratulations to you. I could see like snaps of new highs and then pullback downs. It's more of, do I have a high probability style position on this right now? If you're in the bull trend, you can't really be afraid of it yet. You'd be looking, if you were to be afraid, you'd be looking for a new snap high, a breakdown back underneath something like 2028 that would like solidify a small time frame change of trend, and then something like that would occur. But for now, it's making a series of higher troughs, so basically higher lows. And we're seeing still higher highs. So we'd like to see a new higher high. Weekly closure will be key. If the weekly gets above and closes high, then I would think that pullbacks will be met by buy demand, and probably means that the dollar is going weaker as well. Let's look at gold stocks. They look pretty good. This is where it all began for me. This Wyckoff bottom was the strong buy this year for gold. This 61.8 retracement to certain levels was pretty interesting as well. And if we go over here, let's just quickly get this over for a second. I want to get my fib here. So there's our fibs. And when we came back down to this level, this was a good little double bottom. So you can see here the low, the small steal, the rally. I haven't really been too interested in it in here, but if you are in gold stocks, you could see if we get a weekly closure above this level here, where's the next stop? You'd have to think it's in that 40 zone. So gold making a resurgence in the stock world, and you can see how much it's coming back up and how critical when you go to the weekly this level is. So yeah, interesting point. Certainly a great weekly close should it rally up. That will probably solidify further bullish momentum on the gold stocks. Let's move over to oil. This is the one I've been really interested in. So oil on the, let's call it the actual market here, maybe because it's found such a big buy in this demand zone. If it pulls back to a 61.8, day traders may want to be around there on the smaller time frames. For me, though, I'm staying away from oil crude, and instead I've been, of course, on the stocks. So the sector itself, as you saw with the data we provided earlier today, that it's super big. And XLE 78.11, it's fallen another 1.11%. This is a huge drop. I would expect some relief at some point, but I do actually think that energy will make a new low underneath this point, move back into this 70 to 68 level. And I don't really expect much help for energy stocks throughout 2023, or at least this first period. If demand destruction is here, which the Fed has been causing, usually energy is the first to suffer, and it comes down to yields and understanding all of that stuff as well. And we also brought up some great stats from before. Let's move over here. At least that's my opinion. You know, it's my opinion, obviously. Tesla, let's move over to this one. It is still stuck within nowhere land. If we get a nice big jump out of the gates, that would probably solidify this as an island reversal, and we should move towards 180, as I've mentioned before. If we keep doing what we're doing here, we still have to maintain that we're going towards that gap fill, a 61.8 retracement, and also the 145 kind of level. So we're looking for that in terms of Tesla for now. It still looks weak. It's going to require, though, a market breakdown, which we'll talk about soon. NVIDIA, check the weekly close. This is going to be a big one. Huge shooting star coming off that watch reaction level. That was the first time we really saw that, but it's more significant than that. And it comes down to a lot of stocks. If we close like this, then make a new low on that low for the next week, we're basically solidifying this to be some type of UT or UTAD in a distribution range. So that can really say that, well, one of the hottest stocks, one of the big runners of 2023 is actually tipping over. And that's what we're looking at this point. This is a fairly large rejection candle. It came off an extremely good zone. It took everything that you'd want it to do. So it's like a liquidity steal. And it really does kind of show you some weakness. Apple has been a lot less clean cut. I actually expected it to get back into here. This is what I wanted to see with its earnings. So kind of go like this and then like that. And there is no new low. So it's still in an uptrend, even after the earnings, because it was up after hours as well. We've got a high, we've got a low, we've got a higher high, we've got a higher low, we've got a higher high, we have a higher low. So unfortunately, it's still in an uptrend for anyone that's trying to go bearish on it. I'm still looking for Apple to push this agenda. We don't know it's going to, but that's the level I'm looking at. As a trader, you have to wait. You have to be patient to wait for your levels. Otherwise, you're not really getting involved in it. And look, this stock has maintained its bullish status the whole way through. There's been no lower low swings through this whole trend so far on the daily above. So we're looking for that. We haven't seen it. That will probably be a tip as well for the markets. Now, everyone wants to short regional banks. And I understand you want to short something that is obviously in trouble. The problem is, has it shorted too far? This level here and the way it structures around here, I would say this is where you find some buyers recommitting to KRE. I'm not one of them, but I'm just kind of getting at here that it's been very short and this is well outside of anything. This is where a lot of people are trapped. And this is the point where I don't catch falling knives, so I'm not really interested in it from that perspective. But you can see the structure on the higher timeframes and see the sell-off. So yeah, regional banks, it's already probably happened in terms of the sell-off trade. The initial sell-off was big. This was always very scary. Usually something that drops 20% keeps going for a while, and this could be the shakeout. But these are going to extreme lows. You put indicators on that, you'll see what I mean. Let's move over to the DAX. Still trapped, still in the range. Is that a false break? Well, we'll find out if we actually do something like this. If we do that, then it's another one of the markets around the world showing you that the highs could be in for now and that we're swinging to new points low. For the DAX, if we break to low, 1582, down here, that's kind of like your first take profit and your second take profit on the shorts. It's a pretty shorted index, and certainly a lot of people are going at it. What about the XJO, the Australian market? I've been very negative on this. I am waiting for copper to, of course, fall through those levels to really solidify further sell-offs. I wouldn't be surprised at all, though, to see the Australian market do something like this and move into the 7100s. It looks like a nice little turn here today, but I'm not very bullish on the Australian market at this point. I think the downside is more than the upside. I'll load up the UK 100 because I know there are quite a lot of people that are interested in this market. We'll just quickly chuck that on the charts here. And you can see the weakness. The main weakness here is due to energy stocks. So if energy stocks keep failing, then you'd have to expect the FTSE to also find it. It did come up to a great level to see shorters. It's come back down to probably a little bit of a demand. I would say a little bit lower might be the case. But yeah, the FTSE is not an easy one. There's a reason I haven't left on the charts because it's not really a great level either way, I think, for statistical trades. Let's move to IWM. This is an interesting one. This is a good chart, this one. So IWM had the best short on this week. I love this chart very much. I put it in the weekend video. It came up early in the week, I think it was Monday, and then just shorted the rest of the time. Weekly close will be important, but I'm looking at the futures more than anything else. So I've left the short zone there as well, just so you can see what happened. We got the shooting star, we got the follow through, we got the pickup through the FOMC event. It was beautiful, and then we came down. No new closures underneath 1700. 1700 is a defended level. If we break 1700 below, that kind of solidifies this as potentially being a huge distribution. That then pushes 1650 and then maybe even that cascade effect. So we've got to be really careful. The Russell 2000 is pretty sick. It's nothing like the other markets. Like you look at the S&P 500 versus the Russell versus the RSP versus the Qs, and the Russell is so bad in comparison. And that's kind of like the real economy. The US 2000 and 3000. The 3000 has 98% of all of the stocks in the market in it, I believe, in terms of market cap. Let's move over to the Qs on the expected weekly options low. Nothing much we can get from the Qs themselves. Here is the futures market, and you can see it's just trading in the middle of the range, nowhere near the weakness of the top tech. Big tech, not weak in comparison to the others. Maybe it will become that way, but yeah, not weak yet. Breaks and closes above here, well, that will create squeeze events because at this point, we all know where everyone's stop losses will be. They'll just be above these levels. So of course, that's what you're looking at. Let's move to the S&P though, because the S&P is at demand. It's underneath now the daily 20. So it's underneath the daily 20. It's closed, but it didn't close on its lows, which is not usually a super bear signal when it doesn't close on its lows. We have gaps now to the upside, which are priced, which I put in here in this chart. And of course, we have that little bit of liquidity being injected over the last 2 days. So will that find the buyers? We have a gap at 40.90 and also another little miniature gap at 41.66 to contend with. So let's talk about some scenarios here for the US 500 leading in. First up, squeeze indicators are showing the pain could be to the downside. That's probably replicated by that Goldman outflow kind of concept. But let's talk of the levels on the smaller timeframes. First up, we'll just go to a 2 hour to understand. So if we take a fib of the whole move, so let's take a fib of the whole move, you'll notice that we get into these wicks up here. So this is a fib from the high to the low currently. Heavily traded zone is still in that 41.25, so that's the most heavily traded zone. We know that that was supply, so that will be an important level for the markets. If we scroll a little bit lower and go 5 minutes, one thing did occur over the last 24 hours. We basically went low, high, lower low, higher high, pull back, then found rallies off that point. So 40.56, where that unfilled gap was, where it was, now it's filled, that's where we saw defended line buying. So basically down here is where you think buyers are. And at this stage, it's kind of saying that there should be rallies that are going to push towards at least that 40.90 gap and maybe even up until this 40.99. You can see the structure up here, the supply up here. Now, if we're able to break through 4100, that's where the bulls, I think, get a little bit more control, because basically you'd be going from a low, high, lower low to a higher high. You'd probably pull back from that point, creating another excellent kind of strategy. Then you'd move into the heavily traded zone, and then you'd find, well, what happens here will be paramount. New highs above this level and closures, I would say we're going for new highs and we're going to squeeze. So now it's basically fast and nimble. Theoretically, there's defense around this 40.60, 40.50 zone. You saw that in the small time frames. A closure below this low here on the daily, I believe that opens up underneath 4,000. Why? Because we know the heavily traded zones are down in here. Plus we have gaps at 39.68. So probably the more likely cascade effect would be closures under here, movement down, get the gaps. So get the gaps that are in these levels and then move into 39.69. So that's the type of zones that I think are most important here in terms of the charts and what we're looking for. And yeah, basically it could be a little bit of a rally through this session. 4100, certainly a contended zone. Breach of that probably brings in the rallies just again to 41.25. The bears have to show themselves on this if they're wanting to control this, since we now have a lower low. So that should be where they control the market. And if they're able to control the market, then push a lower low, we go to fill all the gaps. Or we just sell off right now, close below, fill all the gaps. Either or, I like all of those trades. That's what a trader does. You create a certain scenarios. It's what I do for the private community as well. If you're interested in some of that stuff, let me know in the comments down below, and I'll start creating a little bit more strats towards the chess kind of scenarios and the theoretical zones that if we hit them, these types of plays are the more likely statistics from that point. That's usually what trading is. It's not really about prediction. It's more, do we see something? We have the patience, we react to that. And some trades you'll see and you'll say, that's an 8 out of 10. That's a 7 out of 10. That's a 6 out of 10. Like how many times you'd win it out of 10 times. Once you know your stats on things, that's when the game changes really in this kind of vicinity. What about going on with maximum pain? Let's take a look at max pain together. And if we have a look here and we go 5th to the 5th, you will notice that we have 400 puts. Now, this is a huge unwind from where it was earlier in the week. So 405, 46,000, 400s, 66. Max pain is 410. I don't really think it matters too much this week, but just to show you, you can see 400 is unlikely to be broken through the Friday trade into non-farm payrolls. Now, Bitcoin, or Bitcoin as I call it, that has entered into the questionable short zone. Now, it's too early to tell whether it is, but it's made the higher high, which we expected in the last video. And now we're looking, well, we're obviously looking for this to see weakness, which it has so far. I'd like to see it go underneath this level here, pull back into that heavily traded zone, and then basically look towards the short side. So we like the buy. This is where bears have to commit. If you close above this level here, really the only next thing is 30,556, which is a watch level. I'd say that's fairly easy to fill. And then from that point, well, you'd be making new highs, at least in the temporary zone from Bitcoin. So for now, the weakness and the zone has been hit. And yeah, it's quite good. Non-farm employment change is coming 1 hour before the market opens. We